the biggest speculators in the oil market are not algos. They're not hedge funds. The biggest speculators are OPEC and China. The biggest speculators are OPEC and China. You have the largest OPEC cut in history with the highest level of compliance ever. And at the same time, you have China increasing inventories radically. So those are the speculators. And with that, oil is where it is. So to be fairly honest, blaming the algos on this, when you have the elephant in the room, which are two major players.
You're wrong. Because let's just... Well, you're right in terms of their play in the market. And Paul will come in as well. But look, there are hundreds of millions of barrels traded a day, if not billions of barrels are traded every day.
Absolutely.
There's only 99, whatever it is, 100 million barrels consumed every day as well. Yes, I agree that China and OPEC are playing the game, as indeed are the Russians and the US as well. But the billions traded every day puts into not insignificance, but makes it pretty small fry in the actual real consumption, doesn't it?
Really. You know very well that oil prices are dictated by the marginal barrel, not by the billions and billions of whatever is traded, which is, by the way, trading based on the price of the barrel, not dictating the price of the barrel. And I think there are numerous studies from CFTC and anyone you want to look at that show that has no significance. The biggest threat on the oil price is that we have the largest cut in history with the highest level of compliance, and still inventories going through the roof. While at the same time, where everybody was saying that by
Mr.
June
El-Badri used to say to me, $10 to $20.
No, I didn't say that. As I said,
he used to blame the speculators for a lot of that level. You're saying no, Mr. El-Badri.
Oh,
you.
Mr.
I know you're important, but he used to know a thing or two about oil as well.
They always blame speculators on what they know is not driven by speculation.
Well, I'm not where to start really, but I don't think OPEC isn't a speculator. OPEC's.
Oh, really?
Well, let him answer.
OPEC is trying to stabilize supply and demand in the market, stabilize prices.
Stabilize by rising.
Well, I mean, if prices are too low for the shale industry, can't continue at these prices into the medium term. Producers can't continue. Consumers don't like this amount of volatility. So OPEC's job, I mean, speculation, I think, is over the top. And OPEC's job is to attempt to stabilize. As for the rising inventories, we know that there's some funny things in the data. All the balances showed huge implied inventory increases through Q4 and Q1. The actual inventory change was negative in the OECD in both Q4 and Q1. There are 300 missing barrels in the market, so things that should be in inventory which aren't. So the recent increases could be some of that leaching back in. It's very US-based, and I think it's simplistic to see it as a market that's prone for a collapse. We know the US cannot deal with oil at $50 or below for any extended period.
We've heard, I don't know for how many years, that producers could not live with oil below 100. Producers could not live with oil below 80. Producers could not live with oil below 60. Producers adapt.
Are you talking about the price of production, or are you talking about the underlying government deficits? Because they're two different things. The price per barrel, the Saudis can have it as low as you like. But in terms of their government deficit, that's where the problem comes.
We heard it with shale producers. Shale producers, since 2014, 13, I've been hearing that they are unable to sustain oil prices below 80, below 90, below 70, below 60. Of course they can. You just call the service provider and say you lower the cost, and they do, and they did.
Well, the equity market seems to disagree with you because
the equity market is different because they're burning cash.
Let him answer. You sound like me.
Sorry.
You've seen what's happened to shale producers' share prices this year. It's still a sea of red ink when it comes to their profitability. I mean, there's an argument there that suggests that at current prices they're not profitable, they can't make the returns, and the equity market doesn't want to put fresh capital into that sector. Now, to me, that implies that this is too low a price, and not that we should go down dramatically lower.